Welcome back, you legends. I'm Dr. Cal. Let's get right into this video. So the stock market today closed down on all three major indices. The S&P 500 was down 0.94%, the NASDAQ 0.94% as well, and the Dow 0.63%. Moving on to the stock market map, we can clearly see a sea of red with a few and far between pockets of green. Today's biggest losers are technology, energy, software companies, diagnostic and research companies, as well as consumer cyclicals. Apple just managed to hang on, closing the day flat. Microsoft closed 4.6% down, which is a very big move for Microsoft. It is down because the company announced that they will be laying off some employees. The market was spooked by that news because when a huge company like Microsoft begins to lay off employees, it signals that there's a lot of weakness coming in the economy. And it acts as somewhat of a red flag ahead of earnings, because earnings are coming in a couple of weeks for all of these major tech companies. Now let's take a look at the different sectors. The biggest losers were, again, energy, technology, and healthcare. The market leaders for the day were consumer defensives, financials, industrials, cyclicals, and then communication services, utilities, basic materials, and real estate closed somewhere in the middle. There were absolutely no green sectors for the day. Now let's take a look at the daily chart for the S&P 500. Today marks the third down day. Today marks the third down day on the S&P 500 since that high, the $390 high last Thursday. We have a bit of a double top formation right here, guys, with a lower high on the second top. Momentum is still positive, but we have to remember that momentum indicators tend to be lagging indicators. So if we jump into the 4-hour chart, we can see that there's actually a bearish crossover on the PPO, which is a momentum indicator really similar to the MACD, and it occurred at the zero line. So this is very bearish, guys. We ran up to the zero line from about -2, and then we crossed over. We had this bearish crossover today. A bearish crossover like this on the 4-hour chart will trigger a lot of shorting from the algos. We had a similar look right here, guys, back here, just ahead of the May inflation report, and we're in a similar spot today, guys, because tomorrow we'll see the inflation report for June, and the market is selling off ahead of that inflation report. So it's the market telling us that participants do expect this report to be a terrible one with inflation higher than the consensus. I should also mention, guys, that I've actually opened a short position on the S&P 500. I've actually opened a put spread, and if you guys are interested in my trades, I do share every single trade that I make in my Discord group. It's a paid group. It's $20 a month, and you get to see every single trade that I make. Now remember, guys, this is very typical of seasonality. We tend to top around the middle of July, around the 13th or the 12th of July, and then we have a pullback and then a second rally after the earnings come out. This is typical of midterm election years, but remember, guys, earnings are likely to disappoint, so I do not expect to see the second leg of the rally. We will just probably see a continuation of the sell-off, just like what we had in April when earnings came out and a lot of stocks, big stocks, got crushed, like Facebook and Netflix. Back to our charts. This is a daily chart of the triple Qs, the NASDAQ ETF, and again we topped around the $295 level. We have a double top formation right here, and let's take a look at the 4-hour chart. Look at that, another crossover, a bearish crossover on the 4-hour chart, right around that zero line. Now we tried to fill this gap twice and we failed. This is actually very bearish, so unless something extraordinary happens in the next few days, we are likely to see the sell-off continue. We have a similar look here on the Dow Jones Industrial Average, a double top formation right here with a lower high on the second top. So the Dow Jones has actually been underperforming the NASDAQ and the S&P 500 largely because of the significant sell-offs that we've seen in commodities and in energy stocks, which are more heavily weighted in the Dow Jones Industrial Average than in the S&P 500. Now let's take a look at the Russell 2000. Again, a similar look right here, a double top with a bearish crossover on the 4-hour chart right here to close the day. The daily chart actually looks like it's trying to form a bear flag. Now a full measured move on this bear flag will likely take us down. Let's see, top to bottom, oh, right there to $163 to test the lows again. And I would not be surprised to see an undershoot of the lows. Jumping into Nvidia, guys, this is the second day of selling. We had a failure right here to break the resistance line of this descending wedge. This means that we're likely to see selling continue. Same thing on AMD here, guys. We are sitting at the lower edge of this channel. We tend to see bounces in AMD when we're sitting this low in the channel. Remember, guys, AMD is scheduled to report earnings towards the end of the month. So we might see AMD just doodle around here and then rally towards the end of the month. I actually traded AMD and made a nice profit on AMD. I got in right here on the 5th of July. And then I took profits right here on the 7th of July. So again, guys, if you're interested in following my trades, I share all my trades in the Discord group, which you can find in the description below. I did make a trade on Nvidia. I got in right here yesterday because I expected this gap fell right here, and I got up early today right after the market open. I actually took a small loss on Nvidia. I was hoping to see a stronger rally towards the beginning of the trading day. That did not end up happening, unfortunately, so I just decided to take a small loss on this trade and call it a day. Now let's take a look at the most important chart of the day, and it's this, the VIX. Look at this, guys. We had this support line going all the way back into early April, and we've respected this line once, twice, three times, and then we've broken through the fourth time. But this looks to me like a false break because we've broken down and then bounced right back above the support line. And this is very, very bearish. This is pure evil. This is how the market works, guys. It does these tricks, right? Where you look at a really well-defined support line and then you see a break. And so you assume that this is a change of trend, right? But you have to wait for confirmation. When volatility is this high, you just have to wait for confirmation. And we simply did not get that confirmation. This now looks like one nasty, ugly bull trap. And unfortunately, the last few times we had a bull trap like this, right here, for example, we had very, very sharp sell-offs come in short order right after that bull trap. Now, the last time this happened, guys, was on the 9th of February. And if we take a look at the S&P 500 on the 9th of February, it was right over here. We actually ended up seeing one of the steepest sell-offs. We crashed 10% in under 10 days. Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. In just 10 days, the market crashed by 10%, right? So it's a very dangerous zone to be in. And to be honest, when we take a look at a chart like Apple, it's just begging for bears to pile in, right? So the last time we had Apple sitting around here, right above the 50 period moving average on the daily chart and towards the top end of this downward channel was right here, guys. And we just sold off continuously after that. We had a nasty rejection candle today, okay? And quite honestly, Apple held up really, really well over the past 3 weeks. And it's just setting up now for a beautiful, beautiful short position. Now, if we simply mean revert to the middle of the channel right here, we're talking about a $10 plus discount on Apple in just a couple of weeks. And we have seen that happen in the past. Look at that. Reverted to the mean in 1, 2, 3, 4, 5 days. However, this is just one chart of many that I'm looking at. Another one that I'm looking at is Microsoft, and just look at this absolutely humongous bearish engulfing candle. We basically erased the price action of the previous 2 weeks in a single swoop. And it's just an insane sell-off that is honestly unjustifiable by the news that came out. The news was that Microsoft was cutting a few jobs. It's just reducing headcount and then raising the headcount again towards the end of the year. And when you see sell-offs this big on news that small, it's honestly not that big a deal. We've seen Tesla, we've seen Coinbase, we've seen a bunch of companies announce layoffs. It's across the board. So when I see a decisive move like this, it just goes to show how weak the market is, that it's selling off this much on this tiny news announcement. Now imagine if we had really big news like a bank collapsing, or some Chinese real estate developer defaulting on their debt, or one of the EU countries defaulting on its debt. Now imagine how ugly that would look. Again and again we've seen reminders from the market that this is a bear market and bears are in full control. Now let's take a look at Google. Again guys, we have this multiple topping formation on Google. Despite momentum going up, Google has barely been able to put in higher highs. And that's despite the fact that Google will be going through a split really soon. In fact, next week on the 18th of July. And big tech companies tend to perform really well ahead of stock splits like this. So right after the split, I do expect Google to do something like this and just sell off like like a penny stock. A preliminary target would be right around $2,000 because we've had this cluster of price action right around here. Now let's take a look at Tesla, guys. Yesterday I was talking about how Tesla has been uninvestable since the middle of May because we've been just shopping around. Bulls and bears have been losing money, honestly, and it has just been flagging, forming this absolutely massive flag, where again a full measured move on this flag would take us down to about $425. And again, look at that. That's right smack in the middle of this cluster of price action right here. So this level totally makes sense for a target if you're looking to short Tesla. And now let's take a look at AMC. Despite the significant weakness in the market, we're still seeing AMC perpetuate to the upside. Again, I'm looking at this 200-day moving average for a touch, and then for AMC to sell off immediately. So this would probably make a really nice shorting opportunity on AMC. And look at that, guys. GameStop actually showing some strength here. Despite the massive sell-off in the market today, GameStop was up 5.5% at the close, significantly more than that in the middle of the day. But then again, guys, we have the split coming in on the 22nd of July, and as soon as that split takes place, I expect GameStop to sell off significantly because this looks like a head and shoulders topping formation where we have the head right here and a couple of shoulders right there, and a weakening momentum on the MACD. So it looks like what has actually been holding up GameStop at these levels is the split, and once we get that out of the way, bears will be more inclined to pile on again on the short side of this trade. Now let's take a look at the Fear and Greed Index by CNN. We're right smack in the fear zone at 26. And that despite the fact that we're actually sitting at a fairly low level on the put to call ratio. Now the put to call ratio has actually been making higher lows, guys. It's been in an uptrend since that sell-off in November, and we're seeing an uptick again in the past couple of days on the put to call ratio, as we've seen some weakness come in on the NASDAQ and the S&P 500 ahead of this CPI print tomorrow. So to be honest, the put to call ratio is sitting at a really dangerous zone right here. It's basing right ahead of a really major news event. So bears would be looking at this and just drooling all over it. Remember, guys, the put to call ratio is a contrarian indicator when a lot of people are buying puts. When we get massive spikes like this, it's usually when the market makes a local bottom and when people become complacent and buy more calls than puts, and we see a decline in the ratio. That's when the market has actually put in a local top. And as we've seen a double top on the daily chart for the S&P 500, we've also seen a double bottom in the put to call ratio. And it's really setting up for a major sell-off coming in the immediate future, guys. So in fact, probably as soon as tomorrow morning after that inflation figure is released. A quick reminder of the economic events that we have coming up this week. We have the inflation report coming in tomorrow morning at 8:30 a.m. Eastern time. Then we have the producer price index coming in on Thursday, and on Friday we have retail sales and the 5-year inflation expectations. Now, based on the small business index figure that came out today, which was 89.5, significantly below the expectations, I expect retail sales to disappoint significantly, perhaps even come in at a negative number, and that would absolutely shake up the markets and give bears more reasons to short. That's it, guys. That's all I have for you today. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow!